Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 6th of October. I hope you're doing well. We are seeing interest rates sharply higher today. We are seeing the bond market sell off sharply today. We are sitting in the Mortgage News Daily tracking of the 30-year fixed rate conforming loan, 7.04%. So this is the second time this survey has shown rates above 7% in the last 8 days or so. Got to go back to April of 2002 to find rates over 7%. So that is a kind of a grim milestone. That said, when we hit that milestone on Tuesday of last week, the bond market rallied strongly the following day, and we saw interest rates pushed not quite to 6.5%, but to 6.65% on Wednesday of last week. That's a huge swing from one day to the next. And that just really says a lot about how the market is hanging on every bit of news, geopolitical news, economic news. Tomorrow, what's going to drive the market either up or down is non-farm payroll. This is a monthly measure of the strength of the job market. There is some indications that we are seeing higher jobless claims this week, not massively so, but enough to where there are some folks speculating that that report may miss tomorrow. And if it does, we may well see interest rates come down off these highs. The reverse is also true, y'all. Expectations on this report are for 250,000 new jobs to be created, for the unemployment rate to remain at 3.7%. If the report comes in stronger than that, then we're going to see the bond market sell off sharply as it anticipates the Fed having to be more aggressive. So that's kind of what's affecting the markets today. You see the Dow parking money on the sidelines as well ahead of that report. The Dow was down 347 today. We've seen a nice rally in the Dow over the last two weeks or so. It's up to 29,926. That's up 1,200 from this time last week, even with today's sell-off. So a lot of investors parking their money in cash, frankly, to explain today's sell-off in the bond market and today's sell-off on the Dow. And again, parking it likely in advance of that non-farm payroll report tomorrow. This brings up something that is important, though. This market is softening. There is no question. Everybody is feeling it. We're all moving fewer units than we were this time even 4 months ago. And there are opportunities inside every slowing market. And the opportunities here are the number of buyers that we frankly locked out of the market over the last 3 years. These cash poor buyers that maybe needed seller concessions, that may have needed a buy down on their interest rate, that may have needed some concessions in order to get into the house. Those folks are still out there, and they still haven't found a home in a lot of cases. So it really behooves all of us to go through our database, see if there are some folks that we have previously approved. We may have sent you letters for folks that were subject to them saving a significant amount of money. Well, we are seeing contracts come in now with significant seller concessions included, right? So there's a lot of those folks that may well be able to get across the line with a properly structured deal. Folks, we have 30 years experience doing this at Bryce Home Loans. My wife and I have been steeped in this business forever. I am happy to sit down and work with your buyer to go through every line in a potential offer to work a deal that is reflective of their exact cash to close. This is just simple math, y'all. It is not that difficult to craft a transaction around your borrower's available funds. As long as I know what those numbers are, I can certainly back into them and help you structure a deal that gets them across the line. So let's talk about that possibility for some low-hanging fruit. If you have any folks that fall into that category, call me, 210-260-9660. Of course, you can just respond to this email, or you can find me online. Just send them my website at brycehomeloans.com. That's Bryce with a Y, homeloans.com. Stay blessed, stay safe. More to follow after tomorrow's NFP report, and we will update you again this time next week.